S&P with another inside day. It's developing. We talked about this yesterday in some detail. That's why I always say subscribe to the channel, click all notifications, because all these videos are linked. We're going to get to the breadth in a second here and talk about what's going on. But I do think that this is really important to focus on a couple key things that are actually happening here. Number one, you should have sold down a lot today if you were still worried about tariffs and this escalating, because you did have some escalation today out of China, and quite frankly, the market just blew it off, which was very surprising to me. You were really in the same range and you're not doing much. It's not just the short week that's doing it. It's just that I think people are kind of over it. Now, if we look at the basics and start there before we get into some momentum and some other breadth indicators, you're still far off where you need to be off that peak VWAP. You're still down here rocking this one. So we still have that low end and we still have the high end in between these two. And this is really kind of where we're at. You're going to have winners and losers in here. And this is where you start seeing where the new winners and losers are. I think it's really hard to see us getting to a point where we're going to break down and take out those new lows anytime soon, barring a massive escalation. China came out and said that Boeing deliveries from airlines are going to be halted and there's going to be no more new orders. And we'll see how this goes. But this was definitely an escalation. And after what happened with our administration in the US, I'm in the US, I just find it interesting because they are all of a sudden allowing the H20 chips in. They're saying, okay, we're going to slow a couple things down here. Apple gets a pass. A couple other people are going to kind of get passes. That's de-escalation. China went with escalation. Now you could say they have the right to do whatever they want. Right? Both countries do. The issue for me is that if we thought that they were going to come out and throw out some kind of olive branch, that's clearly not the case. Markets do not seem to care. Markets are factoring this in. I thought it was interesting that that's all Boeing did. Now, it's not even a function of how much business Boeing does there, but for me, it was a function of, wow, that's really interesting. That's all we're going to get out of this. I think what you have to do is look at your support levels and the fact that you're not able to get through that support. It's still resistant. And people would say, well, that was never support. Yeah, it was. It was right here. It was support a lot. And so we did battle here, and that is an area of interest. What I find working best in this kind of environment is whether you're doing intraday or longer term, extending your time frames. And I'll show you what I mean by this in a couple examples. You extend them until it doesn't make sense to extend them. I'll give you a couple examples in a moment. But really what I want to focus on here is I want to focus on the breadth indication and what we're seeing here. So this has not adjusted yet for the day, obviously. But one of the things that we talked about yesterday was that this was going to be in the 90s. And it did. It came in, I think it's at like 92 or 93. And the point that I was making is, there's this thing where don't buy any stock that's not above the 5-day moving average. Well, every stock's above the 5-day moving average right now. So what are you supposed to do? Buy every stock? I mean, it's such a silly little thing that people follow trying to swing trade in these kinds of environments, getting run over and don't understand why. I can explain it in greater detail. Maybe I'll do a little bit of it in this video. But when you are down here where you're 20%, you're 50, or your 20-day, you're 50, and your 200 are sitting like this, you need to pay attention, especially the 200 up here was back to 55. Here we're at 29. So that just shows that you have no bull support. Remember how I view these and what these actually mean to me? So the 200 is the last stand of the bulls. So if 70% of the names are under that level, and then at the same time, you're not even at 50% on the 50, and you are where you are on the 20 down 30, and you're 90% over, it tells you that that's a bounce. It's just an oversold bounce. That's all it was. There's nothing wrong with that. It's very tradable. We traded it and did quite well with it. The issue with it is understanding what's actually happening. You need to be over 50% here. You're far from that. So that's telling you what you're actually dealing with. It's telling you the breadth of the market is really timid. And it's really just very tangential. And that's exactly what happened here. Very similar to what happened here. And you might just go sideways for a little bit until it figures out what it wants to be and we get through some of these earnings. And earnings aren't bad. And I do think we should go through a couple of these. I really do. I think that I think they're not bad, and I think they're worth spending some time on here. So we'll probably get into some of that. But I really want to hammer this point home. You're just working off the overbought on here, and you can see it a little clearer here. We'll just jump right into it. So if I look at the SPX on the hourly, this was your oversold. Back down, hits the neutral line, hits neutral, works back down to oversold, gets back to overbought, and now you're in that overbought neutral area, and you're not doing much. So technically speaking, on an hourly basis, if you're trading, or if you're looking at the 4-hour, you're back to neutral. You worked it all the oversold off, and you're back to neutral. So to go out there, and RSI is a momentum indicator. I use it several different ways, but it's most certainly a momentum indicator. So to me, looking at it and going, well, we've neutraled out. So we're not going to regress anymore, right? You always regress to the mean, which is obviously the neutral line. You can see it, overbought, regresses, oversold, regress. It's just a matter of time. So it's not telling you where you're going to go, it's just going to tell you where you are in the regression. So when you're grossly oversold, you know it's just a matter of time. You just don't know if it's from here to here, or if it's from here to here. You just don't know, but you know it's coming. So when you see something like this, you're like, all right, well, we work that off. And then we go and look at the NDX as well, and I think that this is really pertinent. So if you're looking at that level, you were oversold and you bounced. All right, how big was that bounce? Well, it was not small, not at all. Right now you're at 13.5. From soup to nuts, you're at what, 16.7? So you're 16.7% off the bottom. And this is why I'm always so adamant about showing new things that actually work. And I want to show you why. It's so important for me that people actually get this stuff. So when we are here, it's why I do these videos. When we're here at the bottom and you say, I'm going to wait until we close over the 5-day moving average. Let's take this moving average. And let's just say that you're going to take the first 5-minute bar that closes over. That puts you here. That's 10% of the move in the NASDAQ. The NASDAQ had a 16% move. So you're going to miss 70% of that. And then you're going to get involved here, right? And maybe that's your plan. Maybe you're okay with that. Or now if you're going to say, I only do back tests of the 5, great. Good for you. But you still are missing 10% of that move out of a 16% move. And now you're catching the no momentum part of the entire move. There's no momentum in this. You can see it. It's sucked out of it. The problem with that is, let's say that you're saying, I want the 5 to point up. All right, well, the 5 doesn't start pointing up to here. So that still puts you around 10, 11%. And from that spot, if you're waiting for that to point up, what's the high of that since then? 3.5%. Versus what's your downside. It puts you in a very precarious position doing this. And so what I always tell people to do when you're coming off corrections, and I've done this for over 25 years, you need to focus on what actually works. Momentum works, whether you want to believe it or not. Gravity doesn't care if you believe in it, but it's still there. Go look at a 4-hour NDX chart and just go do this on it. It'll take you 2 seconds, literally. Just go and mark off every time you're down here and say, okay, if I went out 12 hours on this chart, do we usually have a bounce? And you're going to see that the answer is yes. Within these 4-hour blocks, if I waited 3 other bars, do I have a bounce? Yeah, you do. It might not be the bounce that you're looking for. It might not be the cat's pajamas. That's what the cool kids say, if you're wondering. It might just be a small bounce. But yeah, you're going to get something there. Just like when you're here, you know that one of these bars is going to start coming down. And it might just be this. It doesn't mean you're going to get this from it, but you can see the negative divergence right there. And again, I use the RSI. You don't have to believe in it, but you don't have to believe in gravity either. It doesn't mean it doesn't exist. So I do think that these tools are very helpful. They were created by people from the 1970s. They're still used in existence today by people that literally manage billions of dollars. So you might want to just pay attention to them. Using a lagging indicator coming off a bounce. I'm not saying it's not important. I actually have them color coded because the color coded is important to me. Red just means stop. Green on top is go. I'm not the brightest bulb, so I just color code them. But to just use that and not use some other kind of momentum indicator is a huge mistake. I can't stress this enough. And it's one of the reasons why when we're up here, we're not really buying. We were buying down here. We started on the 4th. And it was pretty obvious that it was time to start scaling in, and that strategy has paid off greatly. The other thing I want to stress why I'm on this tangent that I seem to be on, and it's going to tie it all together to Boeing and where you should go, your time frames, you need to extend them. So when I say this, and I said this on Saturday's video too, and I'm going to hammer it home, and I'm going to show you what I mean by that. If you're day trading, you need to extend your time frame, and you're going to be like, how am I going to do this? He's making no sense. He's just babbling like old man screaming at the clouds. No, I'm going somewhere. So here's your day trade, and all of a sudden your day trades are here, right? And I think swing trade's very hard in this market. I put on 2 new swing trades the past 2 days. I'm flat on one and I'm down on another. But do you know what's working? All my long-term strategies, not all, but yeah, they are. Actually, they are right now. But the day trade strategies are working too. The barbell. But you need to extend this out. And this goes for everybody that's watching this video. And I'm going to explain what I mean by this. If you're day trading and you're day trade, like here's a trade that we did today on Meta. We shorted Meta. And the whole purpose of this was this. I'm going to get this out. I'm going to get rid of the, this is actually a perfect example because, it's funny because everyone's up here buying this because the 5's pointing up and it was a perfect short. Anyway, let's get to this. So if I look at this, and we can all see the gap fills, right? We can see the gap fills. Now they're fighting the FTC, and now the bad press is coming out. Like they were helping China, and blah blah blah. You can see where this is going, right? They're getting ready to get wrecked. And so institutions want out of this thing, and they're just starting to blow it out. Whatever. For us, for our standpoint, we're just trading it. So we're watching this and we have the level set up and we're going to drop this to a 5-minute chart for a moment. And then what I want to do is just go here to the 15th and you can see the 930 bar and then you can just see the 935. You can see the lift and you can see the rejection right here on the control bar that changed the entire tone of this chart. You can all see that, right? Here's your rising wedge. Rising wedge is out, went in tears. Boom. There it is. There's your big break. Tries to get over that big break, complete Matumbo. So there was a short that we did in here. So process. This is where I'm going with this. So this is John. He types in the room when I'm trading because I can't trade, type, and talk at the same time. I tried. It's a disaster. So he types everything out. So on in here, on that, we're shorting in here. And it's probably on this bar where I finally pull the trigger. And there's a couple other things that I'm not going to get into at all. I could do a whole video on this trade. But the majority of people, what they would do, scale, low a day, I'm out. That's not this market. This market is find the trend and go from there. So the thing that's starting to happen here too is these snaps that you're seeing in the market that are lifting you up and shaking you out of your trades, there's no follow through them anymore. No one's falling for the banana in the tailpipe anymore, where they're spiking the market up and then dropping, and then everyone's like, oh, and they're panicked. Everyone's like, yeah, I'm just going to hold my short. So what's happening is extend your time frames on your trades. By extending my time frame on this trade, and I was very clear that I was doing that this morning, that I'm leaving it on. I want to see how ugly this gets. As a matter of fact, I even think I typed that out. I actually did. Well, John typed it out when I said it. I want to see how ugly it gets. And the point that I was getting at here was extend out your time frame. Start looking at this to yourself and saying, okay, what am I really trying to get out of this trade? What am I really trying to do here? And for me, it was, if we start breaking these levels, we're really going to work itself off. So the majority of people that are doing this for some kind of day trade are watching these levels, and they could be using something like this, where they're using VWAP and going, oh, well, we got over VWAP, I should get out of it. And then it just, completely wrecks you and keeps fighting it. And eventually you've had enough and you throw the towel in. All we're doing is just watching the trade and then you just start to break. Well, I'm not even thinking of getting out of it, really. I got out of like a small portion before. But my goal was to hold this until it started to implode and came down to real levels. And one of my first real levels, that was my target. And so where I'm going with this is turning into a complete lesson, but where I'm going with this is by extending your time frames right now, those trends are going to exist longer. They're not going away. So if something's breaking down, you can see it on this chart. So if something's breaking down like here, it's going to continue to break down all day. If something's breaking down, it's going to continue to break down all day. See it over and over and over again. And that's just one name. Whereas if you look at even something like a Tesla, once it has that direction, that's it. That's its direction. You don't have to be in the same kind of hurry. Once you pick a direction, that's it. And that's because of the way that the inflows and outflows of this market are going right now. It's very different than what you were dealing with before. When I say barbell, that's what I mean. You're leaving your day trades on longer. When you start to do this kind of stuff, you can start really benefiting from it. So like guys that were trading PLTR today and did exceptionally well with it. Why? Once it picked its direction, that was it. There's nothing more to do. Even when you look at something along the lines of, let's take the PLTR trade yesterday along, rallies, breaks down, gets right back to that opening 5-minute range. What's it do up there? Rejects. You already have your direction. See, there's not a big contra trade going on here. There's a big directional bet that's made on this. See, when you start getting into this gets like tools in the toolbox, but then sometimes it's also like, which screwdriver are you going to use, right? Like you're a plumber or you're an electrician, but sometimes you need this screwdriver, another time you need that screwdriver. So like this was my target. I don't have time to edit this all out, but I think this is going to be insanely helpful to people. So here I'm just putting notes in the room for the community while I'm trading so they can see what I'm doing, and then I just tag it. But what I'm doing here is we're short. If you trimmed, I did trim 520. I think we have 508 was on the table. We're starting to break down. I'm watching the RSI, which is like falling off a cliff, and I do watch that. And then what I'm doing is I have this mark right here, and the mark that I'm watching is the top of that wick or the bottom of that wick, because that actually happened. That's not a misprint. So there's somebody down there that was like me. I want to buy. The only reason that that would ever happen, right, is somebody says, I'm going to buy as much as I want to buy. And so then I'm watching that area like a hawk. So once I start forming in that area, other one right here, and I'm looking at it and going, okay, well, I'm in the 30s, I'm at 20, and that's enough. I'm out of the trade. Thank you very much. My target was hit. I wanted it to break. I wanted 508. I'll take the 13 points or whatever. And the purpose of me explaining this is simple. This is how you should be focused on these names. This is the kind of environment that you're in right now. Because once you understand the environment that you're in, you can benefit from it. So the other side of the barbell is exactly what we were talking about earlier. And I'm not going to bore everybody with it and pull out some of the other alerts, but like, here's the stuff that I want to get. Make sure you get the free newsletter, because I'm going to start posting some of this stuff in the free newsletter as well. Links in the description for that. Oh, and if you're on the wait list, check for an email. It's open for 4 more days before I close the community for enrollment again. But if you see like here, I'm scaling into Apple in here. I'm buying it in here. And the whole time people are thinking like, well, why are you doing this? And the purpose of me doing that is I'm looking at stuff like this and going, all right, well, I'm at 12 or a 15. And can I go to a 4? Yeah, sure. We could have a great financial crisis with a pandemic mixed together, and it can always get worse, right? But if I'm to look at this area and I'm just to look at this historically, that's not what then I have to look at this and go, if I looked at RSI, and I get it, if you're trading zero-dated options and you're looking at RSI, you're going to get run over. I got it. But if you're trading and you're swinging and you're trying to figure out how to make longer-term decisions and you're not using this, that's fine, more for me. But when you start to see these kinds of divergences that are in here, like that pandemic divergence, okay, don't pay attention to them. But you're near the same level as you were as a pandemic. You're near the same level in here. And then you realize that, okay, you only have one way to go, and it's going to take you a couple months to get there before you're up at the top end of it again. And it's over and over again, right? I think that is what people are missing. I think too many people are looking at this market right now like this, and it doesn't work in this kind of market. Because you have to remember, like, this is where I'm going with it. You have to remember what kind of market you're in. So, and what do I mean by this? So like, if here's the S&P, we have a 12, a 22, a 55, and then we can show you this with everyone. It gets scary, and there'll be 14,000 posts on it today, and everyone will be like, ooh. But here's your death cross, ooh, 12, 22, 55, 200. So for me, when I look at this, what I'm looking for is, all right, if I'm below the 12, then I can't really be doing swing trades. That's my swing trade like metric line. And I go index sector stock. So then I look at this and there's the 22. All right, cool. Are the bulls in charge or the bears in charge? I'm a simple person. So I need demarcation line. So if it just tells me who's in charge. Bears are in charge. All right, cool. All right, 55. All right, I've lost institutional support. If I'm below the 55, I've lost institutional support. So we'll get to how you tie all this together to the names. 200, I've lost the bulls. All right, so if I use that and then use those levels and I go here and I look at this and go, all right, well then that tells me if I'm in a name and my name is like all these names, and look, they printed this out where we're there, you're in the 60s. So that's actually pretty good, but none of these really did much. But what's important about this is when I look at this and I want to buy a stock, well, 75% of all stocks are below the 50-day moving average. So if you're out there from a relative strength standpoint going, I want to buy a name, what you want to do is go out there and buy the right name. Well, the first demarcation line you should be using is something like this, and going out there and saying, okay, well, any name that is over its 55-day moving average is going to have a strong relative strength. So you just start going through them and taking a look like, oh, Meta's not there, Microsoft's not there, right? Look at Microsoft. And we pointed this out publicly today in the public pre-market. Like, hey, Microsoft got to the 55. This is where it's going to reject. What did it do? It rejected it. It's not rocket science. 75% of them are rejecting their 50. I use a 55. You should use what you're comfortable with. But they're rejecting. So like, how hard is it to think that one of the main names is going to reject too? It's not, again, just don't overthink it. So when you have these other names that are starting to get over there and act that way, like PLTR, oh, I'm over. You want to start paying attention to that. I think that's very important. Now, from my standpoint in looking at all this stuff, the one thing that I would take away from it is some of these companies are not reducing their earnings or their guidance. So Goldman Sachs, record trading revenue, increasing a buyback of like 40 billion or something absolutely insane. Absolutely crushed it. Bank of America absolutely crushed it. That's what I'm seeing. IBKR's down. I haven't had time to go through this yet. It's super thin after hours. Beat on revenue, 4-to-1 stock split, increased dividend. Guidance must be off. Again, at the time of recording this, I haven't had time to look at that, but I will later. And I find this name very interesting, but where am I? Well, I'm below the 55. So which names do I want to look at? And you start just clicking through them and seeing, are we above the 55 or are we not? And I would focus on the names that are above the 55. Now, two things I want to leave you with. Overnight, ASML is going to come out with earnings. They are pretty much the axe with all semiconductors. They really don't exist. Semiconductors really don't exist without ASML. The real ones don't anyway. You're going to want to watch this, and then there'll be a conference call tomorrow. Then after that, we have Taiwan Semi. After Taiwan Semi, then we're going to get a real clear picture on what's going on with semiconductors. I thought it was very interesting that they were all bidding up today. Now, that could just be short covering because it all went away. And these charts look awful. But that is something that we do need to watch tomorrow. We need to see what happens with ASML overnight, and we need to see what happens with Taiwan Semi overnight. That is it.